During this time of year, there's only one question that traders have in mind, and that's, will there be a Santa Claus rally? We're going to talk about that today. And we're also going to talk about our top 5 favorite stocks for the new trading week. But before we begin, I want to talk about our live stream tomorrow night. Tomorrow night, Sunday Night Futures Live, 6 p.m. Eastern Standard Time. Click that notification bell right here. Get notified as to when we go live. And I'll be talking about one of the observations I shared with members during the week ahead commentary, which I posted this morning. And it's a chart that we've gone over in the past, but unfortunately for bulls, there's a storm cloud that is on the horizon, and it's going to be a very nasty hurricane in probably the first half of 2023. So join us tomorrow night as we chat about a very major event that occurred last week in the stock market, and nobody is talking about it. Now, the charts that I'm going to be going over, I already have price targets, entry points, stop loss points already entered in the members area. So members, head on over, go over to your dashboard. You can either go into trade alerts or current portfolio. It'll take you over there, and you can see exactly, again, what our entry points are, exit points, meaning price targets, and what our stop loss points are. Again, they're already in there. So let's talk a little bit about, first, the S&P 500 and our performance last week. Last week, the S&P 500 declined 2.75%, closing near the lows of the week and also closing back down below its volume-weighted moving average in blue. Now, what we're using here is TrendSpider software, so we're going to be able to add on some automated trend lines to help illustrate how you should have known not to be buying stocks and quite possibly have gotten short of the market. Let's begin the build. First, we're going to throw up our fractal trend lines, and you can see that as we've rallied up and into the upper band of resistance for the past 3 attempts to break out, we have been resoundingly rejected at that upper band of resistance. So we knew going into the Fed announcement that we should have neutral positions on. We were able to eke out a gain on the week. And don't get me wrong, we have our problem child trades that we have on right now, but our portfolio of options, meaning options that we sold, not bought, those options that we have sold, which went into the week very, very expensive in anticipation of the Federal Reserve meeting and the CPI data, we benefited from what you call a little bit, not all that much, a little bit of IV crush, implied volatility crush. Some of that volatility found its way back into those options on Thursday as the hangover from the Fed meeting got worse. We also saw some time decay in those positions as well. So we anticipate adding 2 positions and opening new positions this trading week, but as we near the final trading day of the year, we're going to be looking to lighten up, and raising capital will be our primary mission, because the name of the game to profit in 2023, I could summarize it all into one word. It's the L word, my favorite word, liquidity. You must be liquid to take advantage of the fantastic opportunities that the stock market's going to send your way in 2023. I mentioned earlier, the storm clouds are gathering, and you could argue the beginning of the stock market crash has already begun, but we haven't seen a true spike in volatility yet. I'm predicting that in early 2023, we're going to get it. But between now and the beginning of the year, I'm bullish. I think that we are going to get a Santa Claus rally. So the charts we're going to be going over, first, PayPal. Then Palo Alto Networks, after that Tesla, then Amazon, and finally Coinbase. These are all familiar names. We want to stay with the large caps. And you may be saying, whoa, what are you going to do? You're going to short them? No, we're going to buy them. We're going to look to buy these stocks because they got beaten over the head last week and the weeks prior. Now we want to take advantage of what we're anticipating to be a short covering rally. Now, the charts that I go over, I'm going to link them down below on YouTube and on thecontrariantrader.com. So if you want to go down, click on the links to analyze the charts I go over for yourselves, be my guest, They're there for your viewing pleasure. We will be using TrendSpider automated technical analysis. They have an awesome mobile app, and they do have a 60% off sale, which is ending within the next day. So please take advantage of it. And those charts that I linked down below, you could probably be able to recreate and edit those charts. Let's get to it. The first chart up is going to be PayPal. Now, this is a weekly chart of PayPal. PayPal had broken out actually several weeks ago, and we have retraced off the highs considerably on a weekly chart. But we are out of a downtrend channel, daily chart. Now, this is where we want to add on our automated trend lines to identify where we may have support immediately below. And the automated trend lines are saying, look for support at around 67.50 in that neighborhood. Will we be buying there? Not quite sure yet. We want to check out price action. We want to check out volume action. But we are nearing daily resistance after 4 sequential down days. Stochastics, this is our momentum indicator. And you can see that we are potentially putting in a higher low. We are in quote unquote oversold territory. So PayPal, we're looking for a setup here. I think the setup is very, very close to us getting long. So we are bullish on PayPal for a swing trade only. None of these, folks, none of these are investments, short-term swing trades only. Again, our price targets and entry points are listed in the members area. The next chart up, Palo Alto Networks. Now the weekly view here is looking pretty poor. But what we did do is we did find support last week where we found it several occasions before. So do we break the support level? We're not quite sure. It is possible longer term. We do roll over and we continue this breakdown. We could fall dramatically from where we closed on Friday. But when you take a look at the daily chart, we may be able to trade Palo Alto Networks off of this support level here. Again, much like with PayPal, the stochastics are forming a W formation or a double bottom setup, whatever you want to call them cupcakes. It just means that we are beginning to bottom out here, but that does not mean we're going back to all-time highs anytime soon. I think that any rally here is to be faded, but much like with PayPal, 4 consecutive down days, we're due for a bounce. The next chart up, Tesla, weekly view. Now we have a problem child Strangle on this trade, and it's not that we're not losing money on it. We haven't lost money on it. In fact, we closed out a Tesla Strangle. We had 2 on, closed one out on Friday. Net, we did a couple of rolls on it, but net, it was a profitable trade. But there's a tremendous amount of pressure on Tesla shares right now. Longer term, I do think that they are going to head lower, but we are due for a bounce because as you can see on this weekly chart, we are flirting with the lower band of the declining downtrend channel, but there's more room to run. Also, what I don't like about the weekly chart is that we're rolling over on these stochastics, which you don't want to see happen usually anytime if you're bullish, but especially not below 20. That's a real serious sign of weakness because this is supposed to be in oversold territory. And I use that word, I try to use it rarely because it's used so loosely, oversold. Ideally, what you want to see is a higher low here and a hook up. No, we're not getting that. We're rolling over and we could be pressing lower in the next couple of days. So by no stretch of the imagination do I believe that Tesla shares should be bought at the open on Monday. We want to make sure that our support level, which I've already identified, again, it's listed in the members area, that it holds. Now, daily chart, you can see that we are in a downtrend channel. Thursday, it showed really strong relative strength, but on Friday, we had an outside reversal bar, and it really just goes to show you why you should not, let's convert this to a candlestick really quick, why you should not chase morning rallies, especially when the stock market is in decline. Why? Because it ends up like this. While we had a very bullish Thursday relative to the overall stock market, and look for the first couple of minutes of trade on Friday, that Tesla was going to follow through to the upside, but it was a sucker's rally. A lot of folks went running in, buying the open, and I always warn, don't get lured in. And sure enough, by the end of business on Friday, an outside reversal bar, also known as a bearish engulfing, which is one of my top 5 favorite candlestick patterns. I have a 5-part video series down below. Use the link to get my free 5-part video tutorial on my top 5 favorite candlestick patterns. So Tesla, looking interesting, but I do believe that there's more downside to go. Again, entry points, exit points, and stop loss points listed in the members area. Amazon. Now, Amazon weekly time frame looks like dog poop, to be honest with you. It looks really, really bad, and I do believe that we are going to head lower early on this coming week. But I'm looking for a washout on Amazon. And you may be asking, I'm new to technical analysis, so what do you mean by dog poop? Okay, so what happened last week early on is that Amazon rallied, and we took out the highs of the prior week, which is very, very bullish. So a lot of people went running in, and they began chasing Amazon shares higher, only to get clubbed over the head because the shares closed just off the lows of the week. And I predict that we are going to be heading lower. Now, when you take a look at the daily chart is showing that, and these are the automated trend lines. Click of a button, take them off, put them back on. That the daily support, which held for several days, broke on Friday. So another reason why I'm saying, please do not go chasing the morning rally. If in fact they do gap Amazon up, it's a sucker's rally. Don't go chasing it. The stochastics are still declining. They're putting in lower highs again. Stochastics, what are they? They are a momentum indicator. When both lines are declining, especially down below 50, we know that rallies tend to fade. I say that all the time. And what happened last week? Every single rally faded. Don't let the slick back salesmen that come on to CNBC and Fox Business News lure you into a false sense of security that all is well with the world. It is not. We have a very dangerous stock market here, and you need to watch for the setups. Let them come to you. There will be great, great opportunities, but again, I'm going to bring up that L word. To take advantage of those opportunities, you must be liquid. Final stock up, Coinbase. We have a position here. It is our second problem trial trade. Now, this is probably one of my favorite setups for the new trading week. Now, before we go to the daily chart, we want to take a quick look at the weekly chart, which I have not done yet. And there is reason to believe that we are going to see pressure on the shares on Monday, Tuesday. But I believe that it is going to be, much like with Amazon and with Tesla, it's going to be a washout morning. And I may be stepping into the breach. What does that mean? Well, on mornings where we have a real bloodbath, and I know I've done my homework, I'm ready to go for the new trading week. I have my alerts set up here. They're not technically set up here yet, but they will be. Here are my alerts. I'll know when my phone starts firing off that there's a bloodbath occurring in the stock market and that my price targets are getting hit. If that washout does occur, we are going to put some money to work. And we'll just use a tight stop loss order if we're wrong on the trade. So a weekly chart, Coinbase, very similar to the other charts in that there's probably going to be a bit more weakness as we proceed into the new trading week. Daily chart. Now, I'm a lot more constructive here on a daily time frame. You do have several support levels below. Again, these are the automated trend lines. Folks, don't forget about that 60% off of TrendSpider. So we bounced off of daily support last week on Friday. I think this needs one last washout, and then we'll be looking to add to our Coinbase position. But again, folks, with all of these trades that I've gone over, while I see reason to become bullish on the shares, I am very, very concerned about 2023. And if you join us tomorrow night, I'm going to be going over the chart that has me very concerned, and it is not a stock chart. So join us tomorrow night, 6 p.m. Eastern Standard Time, live. If you have a chart that you want me to review, I'd be more than happy to do it. If you want to get reminded 15 minutes to a half hour prior to us going live, there's a link below that you could enter your email address on. We hate spam too. And if you've already subscribed to our 5-part video tutorial on my top 5 favorite candlestick patterns, do not enter your name again on the reminder list. You're going to get reminded no matter what. So I don't want to send you 2 emails, then you're mad at me for spamming after I promised you I would not. with that, folks, please, everybody have an awesome remainder of your weekend. Hopefully, we'll chat tomorrow night, Sunday, 6 p.m. Eastern Standard Time. Till then, be well.